So Cathie Wood is obviously well known as kind of a celebrity investor these days. Her popularity rose off of her huge bet on Tesla, which made her millions of dollars and brought her a lot of fans as well. Following her jump in popularity, she has continued to chase that sort of success with other innovative companies. Go back a year and she was buying huge amounts of Chinese stocks, convinced that it was the best market to invest in and that in the long term it would bring her funds huge returns. Obviously, we now know that that didn't work out too well. She lost millions of dollars as the CCP started to attack lots of different companies, seemingly at random. The Chinese government chose to throw their weight around and show every investor who's really in charge and destroy some wealth while they were at it. Despite what those who invested in China claim, this was not out of the blue. It could have been seen from a mile away, it just required a healthy dose of skepticism. Now, Cathie was not immune to these problems caused by the CCP. She found herself dipping in and out of Chinese stocks month to month before she finally settled on her position today, which is basically that Pinduoduo and JD are the only real acceptable investments in China. Luckily for us, she just went on Bloomberg TV and gave us a brilliant 37-minute long interview where she detailed her thoughts and how she came to them. But first, really quickly, if you're new to the channel, make sure to subscribe. If you enjoyed this video, then hit that like button and leave a comment for the algorithm. Also, make sure to check out our Patreon. We're building a community of investors with loads of exclusive content, including buy and sell alerts for my own personal portfolio. So make sure to check that out as well.
China,
Yes.
you've been in, you've been out. And sometimes we're trying to understand.
Yes.
So how are we supposed to look at China right now and the clampdowns that we've seen in the government, certainly on different sectors
Yes.
that have just decimated those sectors in terms of the value of them?
Yes.
So what do you expect kind of to be your involvement?
Yes,
an investment plan?
Our first move away from China was when China was had a very strong move, and the innovation there was being deeply appreciated while ours was not. So that was that kind of move. The second time we moved in, then we moved in, why? We saw the reaction to COVID, and we got more interested because it was the most disciplined country in terms of both monetary and fiscal policy during the crisis. And I thought that China had the possibility of becoming the Germany and Switzerland of the world, in terms of discipline, monetary and fiscal. As soon as Jack Ma was banished, effectively, last November, we started pulling back. Because what we're doing, and especially during February through May, where our strategy, just to give you a sense how volatile it is, our strategy from mid-February through mid-May, most people wouldn't admit this maybe, but this is how volatile we are.
Yeah.
Transparency. Was down 37%, peak to trough. So we have come back, but during that period, what we do, as we always do, we concentrated our portfolio towards our highest conviction names. China was moving away because almost every week and month there was a new regulatory move or crackdown. And so it was easy to do that. It was great because I'm always scrambling, looking for cash during a correction. Okay, where's the confidence lower? Where let's buy into some of these, our favorites here.
So most of that stuff there we had already heard before. Cathie liked the innovation going on in China. She liked the entrepreneurial spirit amongst its high flyers like Jack Ma, and that drew her to the region, and there's no real surprise there. There was something that she said there that did shock me though, to be honest. She said that the CCP's reaction to COVID made her more confident in the country when it came to investments, and to be perfectly honest, that amazes me. Now obviously she said that it was the way they dealt with their monetary and their fiscal policy that she admired. They didn't print ridiculous amounts of money like the US did, and they didn't just start throwing that money at their citizens via stimulus checks either. Cathie thought that this indicated that China could become an economically sensible country, one that didn't drive up a huge deficit and one that is characterized by discipline like Germany. Now look, that alone isn't a ridiculous idea. It's just how Cathie came to that point of view that is a little bit ridiculous. She saw the CCP literally murder and silence scientists who tried to alert the world about COVID. She saw videos of people being placed in prison vans if they received a positive COVID test. She saw the most authoritarian state in the world increase their powers and infringe on people's rights more than ever before, and yet she ignored all of that and instead chose to focus on the People's Bank of China and how they set their interest rates. This has to be one of the most short-sighted things I've seen an investor do, and it's really hard to think of a way in which Cathie can come out of thinking that unscathed. She also said that when the CCP started to target Jack Ma, that was when ARK Invest started to divest from China and they realised the risk at play. But unfortunately, history doesn't forget, and we know for a fact that that just isn't quite true. ARK Invest continued to invest in Chinese companies after Jack Ma disappeared and after the whole Ant Group IPO fiasco as well. Either Cathie is trying to bend the truth a little here in order to portray herself in a little bit of a better light, or she and ARK Invest changed their minds after Jack Ma disappeared and decided that the regulatory risk in China wasn't so severe, which would just make her a little bit naive.
Now, common prosperity. So what have we done? No China in our flagship. We do own some China in a few of our portfolios, the ones focused on autonomous technology and robotics. But we're very particular. Very low margin companies, because margin is clearly not appreciated by the government anymore. Common prosperity.
Right.
And very beneficial to tier 3, tier 4 cities, common prosperity. So JD Logistics, JD.com, Pinduoduo.
Does it stay this way, do you think, in China for a while?
Well,
I mean, it's hard to say,
yes.
But China is certainly a country when they make a decision, it's longer term. It's longer term planning.
Right.
And President Xi certainly seems to be on this mission.
And I think he is very unsettled that the 3-child policy is not working.
Yeah.
And so there's a big social engineering. And by the way, this was all very forecastable, right? I mean, demographics, they knew 50 years ago what was going to happen.
Right.
So I think that's part of it. And, there are the haves and the have-nots in China, like there is around the world. I think China's taking it more seriously because there's probably more social unrest than we now appreciate. What I don't understand is they're going after real estate, which is 75% of the consumer savings in China.
Individuals in China.
And if yes, individual saving. If the prices are going down, which they have been, I think that could really hurt consumer confidence. I think it already is. And then last weekend, or the weekend before, the government, the national government, went after the regulators who had focused on the financial industry, as well as the financial institutions. And I'm just saying, wow, they're playing with fire.
It's a moving, yeah.
And talk about a cyclical risk out there. Think about that if we lose China. At the margin, China has been responsible for a tremendous amount of cyclical growth.
Right.
And
exactly.
commodity price inflation.
Did an M&A panel here, and one of the risks that one of the bankers brought up is that China specifically geopolitical, even though in terms of military tension. So everybody's watching.
So again, we heard Cathie reiterate her stance on investing in China today. Basically, she does now recognize the risk involved with a company like Tencent or Alibaba because they threaten the security of the CCP. Her way around this threat is by investing in companies that aid the CCP and their policy objectives, companies like Pinduoduo and JD, who work with agricultural and retail services. She also said she doesn't understand why the CCP seems to be targeting real estate because it makes up basically 75% of the average Chinese person's savings. And really, this leads me on to my problem with Cathie's current investment philosophy in China. Cathie thinks that because Pinduoduo benefits the country as a whole, because it helps farmers out and doesn't make a lot of money, that it won't be targeted by the CCP. At the same time, she can't understand why the CCP is attacking the real estate sector because it has made so many Chinese wealthy. The important point here is that the CCP behaves seemingly illogically to us. We can't understand what they plan to achieve or why they do what they do. Cathie recognizes this in one area, but fails to realize that the exact same is true in the other. Tomorrow, the CCP could come out and say that agriculture or farming is the backbone of the country and that its future needs to be secured. They could claim that it's in the country's national security interests to protect their supply chains and ensure their stability, and just like that, the company is nationalized, all investments drop to zero, and once again, Westerners get burnt. The cognitive dissonance here is a little bit difficult to understand, and that leads me to think that maybe Cathie isn't telling the whole truth. She has to know something that we don't, unless she is just being short-sighted. If you're new here, then consider checking out our Patreon. We're building a community of investors where we can talk and discuss all kinds of ideas just like we do on this channel. You also get access to loads of exclusive content that isn't available anywhere else, early access to all videos, private live streams, and buy and sell alerts for my personal portfolio, and you can help support the channel for as little as $1 a month. On top of all that, once we reach 100 patrons, I'm going to hire a full-time video editor to help me put out even more content just like this. If you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part by pushing this video out to more people just like you. I really do appreciate all the support you give the channel, even if it's just leaving a like. There's also a link to my other channel down below in the description you can check out as well. In the description, there's a link to my favorite brokerage called eToro, where you can trade stocks and shares, crypto, commodities, foreign currencies, and more, all for 0% commission. And there's also a link down below in the description to BlockFi, where you can get up to $250 in free Bitcoin, and you can earn interest on whatever crypto you hold, whether it's Bitcoin, Ether, or even stable coins. You can earn as much as 8% interest a year. Stay stoic. Thanks for watching. Until next time.